What would you do if you inherited $1.2 million? Buy a house? Invest for your family's future? Or throw it all into one of the riskiest trades imaginable? This is the jaw-dropping story of one man's high-stakes gamble, a tale of ambition, denial, and the ultimate YOLO. Our story begins with a man living an ordinary life, working a modest job, renting an apartment, and raising a family. Then, like a twist of fate, he received a life-changing $1.2 million inheritance from his grandfather. This wasn't just pocket money. It was the kind of windfall that could buy a home, fund his kids' college, and secure financial stability for years to come. But instead of taking the safe route, he went all in on $40 call options for DJT stock, every single dollar. For those unfamiliar, options are high-risk bets in the stock market. They either multiply your money or wipe it out completely. And with an expiration date of March 21st, 2025, this was a ticking time bomb. At first, he was hopeful. With Trump's inauguration just days away, he believed DJT stock would skyrocket as excitement built around the new presidency. On January 18th, he posted his $1.2 million YOLO bet, confident that political momentum would send the stock soaring. After all, major events like this often drive market hype, and he was convinced DJT was about to explode. But the market doesn't run on dreams. By January 22nd, DJT had fallen to $34.54, cutting his portfolio's value in half. His $1.2 million had shrunk to just $570,000. The big rally he was counting on never came. The internet was watching. Memes flooded in, calling his decision financial suicide. Others cheered him on, crowning him a YOLO king. But as the stock continued to slide, the numbers became more surreal. By January 27th, his portfolio had dwindled to $260,000, a staggering $1 million loss in just a week. To understand how things unraveled so quickly, let's break it down. Call options are contracts that give you the right to buy a stock at a set price before a specific date. If the stock misses your break-even point, the options expire worthless. Then there's time decay. As the expiration date gets closer, the value of the option decreases even if the stock price doesn't change. It's like watching your money evaporate. And with DJT stock stuck well below $40, his options were bleeding value fast. But despite losing over $1 million, he refused to sell. "I'm not selling ever," he declared, doubling down on his belief that DJT would somehow recover. Critics called it a case study in the sunk cost fallacy. Supporters praised his diamond hands. The community couldn't look away. Was he a fool clinging to hope? Or a legend willing to risk it all for glory? But the story isn't over yet. With nearly 2 months left until March 21st, there's still time for an unbelievable comeback, or total disaster. DJT's stock has proven volatile in the past, ranging from a 52-week low of $13 to a high of $67. So, what could happen next? Let's run the numbers. If DJT rallies to $67, here's how the math works. The break-even point for these options is $47.65. That means each contract gains $19.35 of intrinsic value, multiplied by 1,654 contracts. Our protagonist would walk away with over $3.2 million. If he decides to cut his losses and sell now, there's still something to salvage. As of January 31st, DJT's stock closed at $31.60, leaving the options with minimal value. At this price, selling now would recoup around $290,000, far from the original $1.2 million, but better than losing everything. While it's a significant loss, selling now would preserve some capital, potentially allowing him to rebuild. But if DJT stays around $30, the options expire worthless. Why? Because the stock price would still be below the $40 strike price. Our protagonist's $1.2 million gamble would officially turn into $0. The stakes couldn't be higher. 2 months, a volatile stock, and a portfolio teetering on the edge. This story isn't just about one man's gamble. It's a cautionary tale about the risks of options trading, the psychological traps of high-stakes investing, and the dangers of letting ambition blind reason. Whether he recovers his losses or rides this ship to zero, one thing is certain: this $1.2 million gamble will be remembered as one of the wildest trades in Wall Street bets history. Would you take the risk or play it safe? Share your thoughts in the comments below. And if you want more stories like this, don't forget to like and subscribe.